Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite important level of monthly historical structure. In fact, this zone was acting as previous resistance, preceding all this rejection to the downside, again acting as resistance here, and then the market broke above the zone. Now, what we know is that previous resistance, once it gets broken to the upside, becomes support. So at the moment, the market is actually testing previous monthly resistance turns support, and we could expect a potential rejection to the upside away from this area. We can also notice that if we look closer and we look at what kind of pattern the market has been creating, it is clear how we have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take a Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly with this previous level of monthly resistance, which is now turned support here, therefore creating confluence of support inside of this level that we could in fact expect this market to reject to the upside. So the monthly time frame at the moment looks very bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the situation is quite clear as well. During all this massive impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, meaning that at this level, even though we had very strong bullish momentum, anyway, the market found resistance, meaning that this area is a quite strong level of previous resistance that, since the market has now broken it to the upside and is currently retesting it, it should be acting as support, because in the market, previous resistance, once it is broken to the upside, is turned support. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, this is where things really get interesting, because what we can see is that in creating this move to the downside, the market has in fact created a bullish pattern from a daily perspective. It has in fact created this M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside, to go and complete the pattern at the neckline, so the previous support turned resistance from a daily standpoint. So here in the daily, what we could expect is a potential push higher for the completion of this M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and what they're doing specifically on the JPY, what we can see is that with the last reports, net positions have been massively decreased. We went in fact from having minus 55.5k net positions all the way down to having minus 168.3k net positions, showing how institutions clearly have been moving to the bearish side for the JPY. And keep in mind that all currencies on the spot are traded against the USD. So if you're looking at the data for the JPY, actually already you're looking at JPY USD. So institutions shorting JPY USD means that simply they are longing USD JPY. Therefore, USD JPY is currently getting longed by institutions, so we could expect more potential bullish price action to be created. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. So here on the daily time frame, as the market has created this M pattern here on the daily, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline. That definitely would not surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.